As many of you know, I am extremely bullish on the electric vehicle industry. Over the course of the past month or so, I've made videos on Tesla, on Lucid, on Rivian, and General Motors' foray into the EV space. I personally think that the EV revolution is in its infancy and the broader revolution is just getting started. For me, the adoption of electric vehicles is inevitable. It's not a question of if you're going to get an electric vehicle, it's a question of when you're going to get an electric vehicle. But how are we going to fuel and charge all of these vehicles, and what companies can you and I invest in to build some wealth from this growing industry? And that's what we'll discuss in today's video, so make sure you tune in until the end because I'm about to drop some serious knowledge. Now, just really quick before we move forward, if you could hit that like and subscribe button, I would greatly appreciate it. It helps me out tremendously in terms of YouTube showing my content to other people. Over the course of the last 10 years, or pretty much since Tesla became mainstream, there has been a constant beef, so to speak, with EVs. Now, electric vehicles, like every new technology and disruption, has gone through its fair share of naysayers and non-believers. Now, common sentiment from the general public, as well as people I know, has been they're too expensive, or they're too slow, or they don't have enough range, they don't charge fast enough. Oh, you can't take them to the track. Oh, they're too quiet. Oh, there aren't enough chargers. They don't have a transmission, or something else along these lines. But over time, as the battery technology has improved and gotten less expensive, almost every single one of these objections or doubts has been quelled or will be quelled in the near future. Of all the objections I just listed, the one that holds the most merit is that there aren't enough public charging stations. Now, Tesla, the global EV leader, recognized years ago that the EV charging infrastructure was going to be an integral part to consumer adoption, and as of today, they have over 20,000 supercharging stations around the world. Now, that's fantastic, but what about the rest of us? You see, as awesome and robust as Tesla's supercharger network is, it's only for Teslas. So what if you don't own a Tesla, and what if you don't plan on owning a Tesla? What if you plan on buying a Ford Mustang Mach-E, or an Audi e-tron product, or a Porsche Taycan, or a Chevy Bolt? What are your options then? You see, the EV industry is growing rapidly, with McKinsey estimating 250 new models of electric vehicles and plug-in hybrid electric vehicles are expected to be released globally over the next 2 years. They also anticipate that as many as 130 million EVs could be sharing the world's roads by 2030. Now, to put that in perspective, in 2020, about 3% of vehicles sold were EVs, and that number is expected to grow to at least 30% by 2030. Now, I recently watched a CNBC interview with Blink CEO Michael Farka. Now, Blink is one of the charging companies that I'll cover in this video. Anyways, Michael Farka stated that if you look at the automotive industry as a whole, over 99% of all automotive companies ever created have gone bankrupt. His point was that historically, the companies that have been the most profitable off of the transportation industry have been the companies that supply fuel, in this case, electricity. And he's right. Some of the biggest companies in the world over the past 100 years have been fuel-related companies, whether it's, PetroChina or Saudi Aramco or Royal Dutch Shell, BP, or even Exxon. So now we know that fueling the automobile industry has been more successful and profitable than the actual automobile industry. But the question is, how do we position our portfolio, and what companies and stocks can we buy today to get exposure to the rapidly growing electric vehicle charging industry? And that's what I'm going to talk about today. I personally bought into 2 EV charging companies yesterday. One is Blink Charging, ticker BLNK, and the other is ChargePoint Holdings, ticker CHPT. Now, I've been eyeing both of these companies for some time now, but up until recently, they were just trading a little too rich for my blood. But over the past month or so, both company stocks have come down substantially to more attractive levels, and I went ahead and pulled the trigger. In fact, stocks across the EV sector have taken a beating in recent weeks, with shares of Tesla, Li Motors, NIO, and pretty much everything EV related coming down to more attractive levels. So let's start off with talking about ChargePoint Holdings, which went public via SPAC on February 25th, 2021. Now, ChargePoint currently dominates the charging sector with a whopping 73% of the market, and they are on a hyper-aggressive growth trajectory, aiming to grow the revenue from $135 million at the end of 2020 to nearly $1 billion in 2024. Now, ChargePoint makes hardware and cloud support software and operates over 14,000 charging locations. Now, ChargePoint's products serve commercial, fleet, and residential households, and they generate revenue through both upfront and recurring streams from hardware and software products. If we take a look at ChargePoint's stock chart, we can see that from September, when the SPAC merger was announced, to December of 2020, the stock nearly tripled and peaked in the high 40s. Now, since then, the price has contracted, and this week it's been trading in the mid to high 20s. The thing is that with all of these EV charging companies, it's hard to evaluate them effectively because they are not cash flow positive due to the fact that they are investing so much back into their respective businesses. So the valuation and long-term outlook of all EV charging companies is largely based on three assumptions. The first assumption is that there will be strong penetration of EVs into the existing automobile market. The second assumption is that there will be unobstructed availability of battery materials. And the third assumption is that governments around the world will be supportive in the push towards the electrification of vehicles. Of the three, my business instinct tells me that the availability of battery materials would pose the biggest threat to the sector as a whole, but maybe we can cover these threats in a separate video altogether. For me, ChargePoint is an attractive company because I'm bullish on the sector as a whole, and ChargePoint dominates the sector with 73% market share. Additionally, they have been making investments to grow their business in Europe for years and only plan to invest more in Europe in the coming years. Now, this is an overlooked attribute of ChargePoint because Europe is ripe for action. As a whole, Europe already has 600,000 charging points, compared to North America's 300,000 charging ports. Not only that, year-over-year adoption rates of EVs are higher in Europe compared to the rest of the world, and European governments and regulators have been leading the efforts to curb CO2 emissions for years. Now, this coupled with the recent dip in the share price of ChargePoint is why I'm investing in this company long term. The next company I'm going to be talking about is Blink Charging, ticker BLNK. Now, to begin with, there is nothing about the finances of Blink that would make you think it's worthy of its valuation. Over its 11-year history, it's never posted an annual profit. But regardless, investors drove Blink's share price up almost 3,000% over the course of 2020. And the reason behind this growth is that Blink is a green energy company that's in the business of charging electric vehicles. And if investors are certain of one thing, myself included, it's that EV charging companies are a must-own investment of the future. If you think Tesla's stock price over the last year or so has been incredible, just check out this chart comparing Tesla to Blink over the past year. Even with Blink's recent dip or price correction, it's still up almost 1,400% compared to Tesla's 400% over the past 12 months. Now, Blink was an early market leader among charging companies, but has kind of lost its lead and now controls about 7 to 8% of the public charging sector, depending on the source. Now, I like Blink because they have a very flexible business model that is tailored to each specific location. They've essentially future-proofed their chargers so that they'll be able to adapt over time without having to completely replace them. And their client list is impressive and continues to grow by the day. And it's also encouraging that Wall Street analysts remain bullish on the company with an average price target of $63.50 a share. In summary, Blink and ChargePoint aren't the only EV charging companies that you can invest in, but I do think they have the brightest futures. And with their recent price corrections, I think this is a good entry point for long-term investors. Now, if the stocks have more short-term pain, I will happily buy more shares to reduce my average cost and increase my long-term gain. I think the industry as a whole has tremendous upside, and as I've stated earlier, the industry is just in its infancy. And another reason I like Blink and ChargePoint, and this reason kind of goes under the radar, is the fact that they both make attractive acquisition targets for the big oil companies. Now, you see, the oil companies aren't just oil companies anymore. They're energy companies, and I'm sure they want a piece of the pie. And many of them have already started converting gas pumps to EV charging stations, and I only see this trend accelerating in the future. But if they want to accelerate their growth and buy an existing EV charging company, I think both Blink and ChargePoint would be attractive acquisitions. Both of these companies are focused on electrifying everything from our hospital parking lots, our retail parking lots, and the places that we live and work. Now, for me, investing in the electric vehicle industry and the infrastructure that supports it is a no-brainer. I mean, not only do these companies have consumer support in terms of the amount of people converting to electric vehicles, they also have the support of governments around the world, and especially now in the US with the Biden administration's plans to reduce America's carbon footprint. Now, this isn't the only strategy or way to invest in the EV charging industry, but it's how I'm doing it, and I wanted to share my thought process with you all. If you are taking a different approach, I would love to hear about it in the comments section below. As always, I hope you learned something new today, and I'll see you all next time.